Today is Monday, April 21st, and this week is supposed to be a fairly light week in terms of official economic data. It's next week that we get the advanced estimate of the first quarter GDP, so wouldn't be surprised if we get a little fireworks around that particular data release. But despite the fact that we're not expecting a lot of economic news this week, there's still an abundance of weakness when we look at the U.S. stock market. This is IWV. You can see even prior to last week, we had this death cross where the 50-day moving average dips below the 200-day moving average. Generally speaking, that is not considered to be a good omen. I also want to highlight the fact that last week we had 4 days of trading in the United States stock market. None of them were able to eclipse the highs from that epic rally, which again, we're waiting for a follow-through signal to really indicate that things are healing. The other thing we want to highlight is when we look underneath the surface, we can see that only 19% of the stocks in this universe are trading above their 200-day moving average. That is an abundance of weakness. It's a little after 3 as I'm recording this last part of this video, and I want to show you what I'm looking at on a regular basis. This is the S&P 500 on the screen in a couple of different layouts. I've got my 5-minute candle chart, I've got a weekly candle chart over here, and this is the daily candle chart. We're going to zero in on that and draw the point. But before I do, I want you to see the magnitude of what I'm about to show you. Today, the S&P 500 is down approximately 3%, and this is the point. We've talked about this so many times that volatility frequently begets volatility. Periods of volatility are usually followed by more periods of volatility. And this really shouldn't be that surprising once we've looked underneath the surface. But here's the point. After the epic rally of Wednesday, April 9th, we had all kinds of people coming out of the woodwork saying, hey, the bottom is in, and wanting to jump back in and off to the races. And we would say, no, that is what is frequently referred to as a bull trap. And so can we say that the bottom is in? No, we can say that a bottom is in. This candle right here, Monday, April 7th, so far is a low. It is not necessarily the low. We're not going to know that for some time. But when we see an epic rally like that, as we discussed last week, this is frequently what is referred to as a bull trap, and this is why we do not try to pick the bottom. So while we are actively managing client portfolios, we are not trying to pick the bottom, and we would strongly discourage you from doing that either.